In January 2026, Governor Ron DeSantis stood at a podium in Davie, Florida, and announced what he called the most significant insurance rate reductions in modern memory. He said Citizens Property Insurance would be cutting rates for the majority of Miami-Dade homeowners, an average drop of nearly 14%. Thousands of policyholders in Broward and Palm Beach counties would also see relief. The headlines hit fast. Social media lit up. People were sharing the news everywhere. And then the renewal bills started arriving. And for a lot of homeowners, the number on that bill didn't budge. So what actually happened? Why did rates go down, but your premium didn't? That's exactly what we're breaking down today, because there's a very important difference between those two words that the headlines completely skipped over.
Let's start with what was actually announced, because the details matter here. Citizens Property Insurance, which is Florida's state-backed insurer of last resort, confirmed that about 73% of its policyholders in Miami-Dade County would see their insurance rate decrease by an average of 6.3% when renewals go out in June. Statewide, the average decrease was announced at 5.6%. Then, in a separate announcement in January 2026, DeSantis went even further, saying Citizens policyholders in Miami-Dade would see average reductions closer to 14% under new filings taking effect in spring 2026. On the surface, that sounds like a big win. But here's the thing that WLRN, the South Florida public radio station, pointed out right away when they dug into the numbers. The governor announced decreases in the rate, not the premium. Those are two completely different things. The rate is the base cost of insurance per dollar of coverage. The premium is the actual dollar amount on your bill, and your premium is calculated using the rate, but also using your home's current replacement value, which goes up with inflation, your coverage choices, your deductible, and any add-ons your policy includes. Here's how that plays out in real life. Say your home was valued at $400,000 for coverage purposes last year. This year, because construction costs have gone up, the same home now costs $430,000 to replace. Even if the insurance rate goes down 6%, your premium could still end up higher because the underlying value the insurer is covering just went up. According to Stacy Giulianti, the chief legal officer at Windward Risk Managers, their subsidiary, Florida Peninsula, applied for rate reductions of around 8% for homeowner policies. But he said straight up, and I'm paraphrasing here, "I cannot predict what the cost decrease to customers will actually be, because inflation may push the home's rebuild value up and customers change their coverages." So the rate going down does not guarantee the bill going down. That's the part that got lost. Now let's talk about the real cost picture in Miami-Dade right now. As of late 2025, the average annual homeowners insurance premium across Florida, including wind coverage, was sitting at $3,815, according to the Florida Office of Insurance Regulation. That number is still up about 6% from a year ago, even with all the positive news about rates slowing down. In Miami-Dade specifically, the average premium is around $5,095 a year, and for coastal properties with $300,000 in dwelling coverage, some homeowners are looking at over $7,000 a year. That's the reality on the ground right now. Compare that to the national average of about $2,181, and you start to see why so many people here feel like the market news and their actual bills exist in two different worlds. And here's the brutal context. Back in May 2022, when the state legislature passed its first round of insurance reforms, the statewide average premium was $2,798. As of late 2025, that same number is $3,748. That's a 34% jump, even after all the rate relief announcements. The reason? Construction costs. According to the National Association of Home Builders, rebuilding a home in Florida cost around $103 per square foot back in 2015. By 2024, that number had climbed to $162 per square foot. That's a 57% increase in construction costs alone. And every time that number goes up, your coverage amount goes up with it, and so does your bill. So even when the rate drops, the math doesn't always work in your favor. Real quick, if you're finding this breakdown useful, hit that subscribe button right now. We cover the Florida real estate market every week. Insurance changes, home prices, what's happening with buyers and sellers on the ground. This is the kind of stuff that matters if you own a home, rent one, or are thinking about buying in Florida. Subscribe and you won't miss it.
So here's where the story gets more interesting, because there is real progress happening. It just hasn't fully shown up in people's bills yet. For years, Florida had a lawsuit problem that was unlike anything else in the country. The state accounted for about 8% of all homeowners insurance claims in the U.S., but it was generating nearly 80% of all the country's insurance litigation costs. That is not a typo. 80% of the nation's insurance lawsuits coming from one state. The reason was a legal structure called one-way attorney fees. Basically, if a homeowner sued their insurer and won even $1 more than what the company offered, the insurer had to pay all the legal fees. That created a system where law firms had every incentive to file lawsuits and almost no risk. Contractors were knocking on doors after storms, getting homeowners to sign over their insurance rights and then billing the insurer for wildly inflated repairs. Between 2013 and 2020, an estimated 71% of total insurance claims costs in Florida went to attorney fees, not to rebuilding homes, to attorney fees. Lawmakers finally killed that system in 2022. Then in 2023, they layered on more reforms, and the results have been measurable. Lawsuits related to auto glass repairs alone dropped from 24,720 in the second quarter of 2023 to just 2,613 in the same period of 2024. Property claims lawsuits fell sharply too. Reinsurance costs, which are what your insurer pays to protect itself from catastrophic losses, started coming down as global reinsurers got more confident in Florida's market. As of January 2025, Citizens had shrunk from a peak of 1.4 million policies down to under 400,000, the lowest level in 14 years. 17 new private insurance companies entered the Florida market. Companies like Florida Peninsula, Security First, and Universal Property and Casualty filed for rate decreases. State Farm filed for a cumulative rate reduction of 20% on auto. The market was, by every measurable standard, healing. But healing is not the same as healed, and that 5-year cumulative rate increase of 54% doesn't disappear overnight.
Here's the thing that doesn't get talked about enough. Not everyone is covered by Citizens. Citizens is the state-backed insurer. About 42,000 homes in Miami-Dade are covered by Citizens right now, and those are the households most likely to see direct premium relief from these announcements. The private market is a different story. If you've already been moved or pushed from Citizens to a private insurer through the state's depopulation program, your situation is more complicated. Private market premiums in South Florida have historically been higher than Citizens rates. When insurers take over a Citizens policy, they're actually forbidden from raising the premium until your annual contract expires. But once that contract renews, the private market rate applies, and that rate can be meaningfully higher. And even for the homeowners who are with Citizens and will see a rate decrease, the benefit hits at renewal, not immediately. Most Citizens renewals in Miami-Dade go out June 1st, so if your renewal doesn't come until October or November, you're waiting until then. For people on private policies who got moved out of Citizens in the last 2 years, the next renewal letter might still be a tough read, even with all of this good news in the headlines.
So here's the bottom line. The insurance market in Florida is genuinely improving. The rate reductions are real. The lawsuit problem that nearly collapsed this market is getting under control. 17 new insurers came in. Citizens shrank by 50% in 1 year. That's not spin, those are real numbers. But the gap between what the market is doing and what's on your bill right now, that gap is still very real too. Construction costs are still high. Home values are still up. And a 5 or 6% rate decrease on a $5,000 premium in Miami-Dade only saves you about $300 a year after a decade where premiums climbed by hundreds of dollars annually. The direction has finally changed, but if you're waiting for your bill to feel like 2019 again, that's probably not coming anytime soon. Everyone who owns a home in South Florida is watching the next renewal closely, and honestly, so are we. If this video helped you understand what's actually going on, share it with someone in Florida who's dealing with this. And if you haven't subscribed yet, now's the time. We cover Florida real estate every week, and this story is only going to keep developing.